A report for the European Parliament shows that banking remains dominated by national champions, especially in the large countries. But the authors don't identify the real culprits behind the failing banking union. Let's find out what's really holding back the formation of pan-European banks in another episode of the Finrestra podcast. So this episode is based on a report by 3 authors at Bruegel, a think tank in Brussels, and they are Julia Gotti, Conor McCaffrey, and Nicolas Véron. And their report is titled Banking Union and the Long Wait for Cross-Border Integration. I'm going to put a link in the description of this podcast if you want to read the whole report, because they do a lot more than I'm going to talk about. For example, they study the ownership of government bonds at European banks, which is something that was quite relevant during the banking crisis, like in 2011 or 2012, but is something that doesn't interest me. And so I want to use their report to talk about the structure of banks in the Eurozone mostly, and then also the question of why aren't there more banks active, not just in their home country, but all across Europe. And one of the interesting figures in the reports, and there are actually several, is where they look at the total banking assets in each country in what they call, or what is called, the banking union. And just to be clear, what is this so-called banking union? These are the countries that have like the single supervisory oversight of their larger banks by the European Central Bank. And so you know that the ECB, or European Central Bank, is responsible for the euro area. So the banking union includes all 20 countries that use the euro, plus Bulgaria, which is a bit strange, but Bulgaria, its currency is pegged to the euro, so in effect it has a fixed exchange rate to the euro, and also it has a lot of banks controlled by banks in the eurozone. So it actually makes sense why Bulgaria would also be in this so-called banking union. And if you look at the banking assets per country, you see, probably not surprisingly, that the countries with the biggest banking sectors are France, Germany, Italy, Spain, and the Netherlands, which are also the 5 biggest countries in the euro area, both economically and by population. So this actually makes sense. Now, I do have a little comment on the data that is used in the report. They use data from the Banker, which is some kind of publication. But I have studied banks before on a project for financial geography. But one of the things that I learned there is, if you look at data sets on European banks, it's best to check out how they deal with Luxembourg. And here in the report of the guys from Bruegel, I noticed that the banking assets in their data set in Luxembourg are about 500 billion, while in reality they are closer to 1 trillion. So they are missing quite some data. I'm not saying it's as bad for all the other countries, but it's definitely something to keep in mind. However, because they use this one central data set, we have to assume that the data quality issues will be somewhat the same across all of the countries. And so we can use the data that they present to get some idea about trends and proportions in Europe. So other than the fact that these 5 countries, so France, Germany, Italy, Spain, and the Netherlands, have the largest banking systems, what's also very apparent from the research that they've done is that in these countries, the banking system is dominated by large domestic players, maybe with the exception of Germany, because in Germany you also have a lot of cooperative banks. So you have the Volksbanken and Raiffeisenbanken and also the Sparkassen, which are typically local banks next to the bigger banks. So I'm gonna come back in a minute to the smaller countries in the banking union, but another picture that they show is the distribution of assets across the 10 largest banking groups in the banking union. And what's remarkable is that 5 of the 10 biggest banks in the Eurozone are actually French banks. So I guess the best well-known banks in France for non-French people are BNP Paribas, Crédit Agricole, and Société Générale, because they typically also have significant activities outside of France. And then you also have BPCE and Crédit Mutuel, which are groups made up of smaller cooperative banks that are mainly active within the French borders. And then next to the 5 big French ones, you have Santander from Spain, ING from the Netherlands, Deutsche Bank from Germany, and 2 Italian banks, Intesa Sanpaolo and UniCredit. And if we have a look at the domestic assets versus the international assets, there are actually only 3 banks of the 10 that are mentioned in the report from the guys from Bruegel that have more than half of their assets outside of their home countries. So the biggest of those is Santander, which has a lot of activity in the Americas. So in Latin America and in countries like Brazil and Chile, but also in the US in the case of Santander. And Santander also even has activities in the United Kingdom and in Poland. And then for ING, it is one of the top 3 players in the Netherlands, but it's also big in Germany and in Belgium, as well as in Poland and a bunch of other countries. And then in the case of UniCredit, inside of Italy, UniCredit is the second largest bank after Intesa Sanpaolo, but UniCredit is actually bigger in Germany, and if the bid for Commerzbank goes through, so the CEO of UniCredit is trying to buy Commerzbank, which is one of the larger banks in Germany, then Germany would become almost half of the or even more than half of the activities of UniCredit. And UniCredit is also active in a bunch of Eastern European countries. So these are the 10 biggest banks in Europe. However, also here I have some issue with the data that is used by the guys from Bruegel. So they look at the assets of the banks, which they try to match to countries. However, as they note in a footnote, that's not always possible. For example, for Deutsche Bank, they notice that its branches or subsidiaries in, for example, the UK are attributed to Deutsche Bank in Germany. But I think a more fundamental problem with this kind of analysis based just on assets is the fact that it's not assets per se that make money for banks, but you need like net interest income or income from fees and commissions. And for example, I made a lot of profiles of banks for those of you who've watched my YouTube channel. And for example, for Germany, although in the Bruegel report or the report for the European Parliament, they find that almost 80 or 90% of the assets are attributed to Germany. Germany is only a little bit more than a third of Deutsche Bank's revenue. And they have a large revenue from the US and UK and a bunch of other countries. So that's definitely something to keep in mind. However, why am I telling all of this? Well, because you cannot just look at the top 10 banks to understand the European banking system. So if we look at the breakdown of banking assets by the nationality in the banking union, so for France, it's very clear that the big five, so the big five that are also top 10 banks in Europe, they totally dominate the banking system there. So more than 90% of banking assets in France is controlled by French banks. In Germany, the picture is a bit more complicated because you have so the large domestic banks, which are not just Deutsche Bank and Commerzbank, as I already mentioned, but you also have a bunch of what are called Landesbanken. So these are state-owned banks, not state in the sense of the German federal government, but the states like Bavaria or Baden-Württemberg, for example. So I think the biggest Landesbanken are Bayern Landesbank, the Bavarian Landesbank, LBBW, and Hesse Landesbank. Those are three that come to mind. And other than that, so you have a lot of what are called in Eurospeak the LSIs, or less significant institutions. So as I already mentioned, those are the Volksbanken, Raiffeisenbanken, and Sparkassen. And then in Germany, a bit less than 10% of the banking sector is owned by foreign banks, or I should say by other banks in the banking union. And as I already mentioned, I guess, those are mainly UniCredit and ING, who have significant operations in Germany. And then you also have a chunk of a bit less than 15% in Germany that is controlled by banks from the rest of the world. And that's mainly due to the presence of Frankfurt. Frankfurt is the biggest international financial center inside of the EU. And so you have banks like JP Morgan or Goldman Sachs, which have significant operations in Germany. Then if we move on to Italy, definitely the biggest banks there are Intesa Sanpaolo and UniCredit again. And you also have a bunch of mid-sized Italian banks like BPER or BPM or Icrea, for example. And then in Italy is the big five country which has the most other banks from within the European Union, and those are mainly BNP Paribas and Crédit Agricole, who have a bit more than 10% of the banking share in Italy. Spain is definitely controlled by big domestic players. In Spain, you have the big three, which are not just Santander, but also CaixaBank and BBVA. And then in the Netherlands, it's a bit a similar situation. More than 85% of the banking market are domestic players, mainly the big three in the Netherlands, which are ING, ABN AMRO, and Rabobank. So that's it for the big five. But then the story of, banking is dominated by national champions doesn't apply to most of the, 16 other countries in the banking union. So the sixth biggest economy in the Eurozone is Belgium, my home country. And there we see that the big domestic players, they have less than 50% of the banking market. So in Belgium, there are 4 big banks. So the domestic players, KBC and Belfius. And then the other big 2 are BNP Paribas Fortis and ING. So BNP Paribas Fortis is obviously owned by French BNP Paribas. And then for all of the other countries, it's just in 2 Euro countries, namely Finland and Greece, where local banks dominate. But actually in almost all other countries, you see that the banking system is dominated by foreign banks. So I'm not gonna deal with all of the countries, but for example, in the Baltic countries, so Lithuania, Latvia, and Estonia, you see presence of other EU countries, which in practice are 2 Swedish banks, Swedbank and SEB, while in Central and Eastern Europe, so countries like Slovakia, Croatia, or Bulgaria, for example, you see the presence of banks from the Eurozone. And in practice, in Central and Eastern Europe, there's a big presence of UniCredit, and also Intesa Sanpaolo is active in some countries like Slovakia or Croatia. And then in a bunch of these countries in Central and Eastern Europe, you also have 2 Austrian banks that are big players, Erste Bank and Raiffeisen Bank International, as well as Hungarian OTP and Belgian KBC. So this is why you cannot just look at the 10 biggest banks. And also, it's not a good idea to do an analysis of European banks by only looking at the Eurozone or the banking union. Because if you expand your scope and you look at the entirety of the EU, you notice that outside of the big 5 Euro countries, the banking landscape is actually already pretty diversified and internationalized with a lot of foreign ownership. Also, one of the, or actually the largest economy outside of the banking union is Poland. And there, although the largest 2 banks are domestic ones, a lot of the banking system is foreign owned. So, for example, in Poland, ING is present there. I think the biggest foreign bank is Santander. And you also have German Commerzbank and French BNP Paribas, who are quite big players on the Polish banking market. So, as always, when you look at Euro data, you should be aware that the EU is more than just the Eurozone or like the big 4 or big 5 countries. Another caveat is, like, for example, in the Nordic region, so Sweden and Denmark still have their own currencies. They don't use the euro. And in those 2 countries, Finnish-based Nordea is a significant player. So also there, in the Nordic region, you see some foreign ownership. That is not the case if you just look at countries like France and Spain, for example. Another thing that I think is deplorable if you read research on the EU is, of course, Brexit happened, so the UK is no longer in the European Union, but it would have been very instructive to see how diversified or how internationalized the banks are in the United Kingdom. Because I'm pretty confident that although retail banking is pretty much British, maybe with the exception of Santander in the UK, the banking system as a whole is very much internationalized in the United Kingdom, and you have a lot of big American investment banks in London, of course. But even broader than that, I know from my own research that pretty much every big global bank is present in the UK, and that is something that you don't have even in places like Frankfurt. So it will be interesting to make the contrast between the banking union and then a country like the United Kingdom. Okay, moving on. So I think I gave you a fair overview now of the structure of the banking market within the banking union. Now we move on to the question of, are we making progress towards a more integrated banking market in the banking union? And when I say we, I mean, of course, the European Union or the policymakers in Brussels. And this brings me to the first chart in the report for the European Parliament. And it's also the most damning chart that they show in the report. Where in figure 1, they show the euro area bank mergers and acquisition based on the total assets of the banks that are acquired. And there you see a very clear picture of two periods. So basically you have the period of the late 1990s up until the banking crisis of 2008, where there was a lot of M&A activity going on. So you had a lot of mergers, both domestically and also internationally. And then after 2008, this M&A activity basically stops, and it's mainly domestic consolidation that we see. So just on the first period, so from the late 90s until 2008, we still have some banks, or the names of the banks remind you of that M&A activity. So for example, the EU's biggest bank, BNP Paribas, obviously came from the merger of French banks BNP and Paribas, while the largest Italian bank, Intesa Sanpaolo, used to be or came from the merger between Intesa and Sanpaolo, obviously. And then the latest, greatest cross-border merger is a bank that I also already mentioned, BNP Paribas, who took over Fortis. So now they have BNP Paribas Fortis as the biggest bank in Belgium. And after that, you mostly see mergers of domestic banks. So some that I remember are CaixaBank and Bankia in Spain, or Intesa Sanpaolo, which acquired UBI Banca in Italy. And that has very obvious reasons, because if you're already active in a market, then it makes sense that you would acquire another competitor within that market to reduce costs. So I think I already made a video a long time ago about the banking union. So maybe check out that one on my YouTube channel if you want to. Now, again, here I'm not 100% happy with this chart, because although it's true that there haven't been a lot of cross-border mergers in the Eurozone, if you look outside of the Eurozone, for example, in Central and Eastern Europe, quite some consolidation has been going on there. But that's gonna be for another episode maybe. But of course, there you have much smaller banks in terms of balance sheets, so it's not as spectacular, but there's definitely consolidation going on. And even within the banking union, banks have also been focused on their core activities and left some countries or some activities to their competitors. But that's going to take me too far for this episode. So we observe that although there's a banking union with a single supervisory mechanism, that there haven't been a lot of mergers, and especially not a lot of mergers between countries which have their headquarters in different countries. So what are the reasons for that? So we had the basically lowly regulated 90s and 2000s, and then with a lot of M&A activity, and after that highly regulated with very few mergers and acquisitions. So the authors identify a couple of problems, and one of those is that stock prices have been low. And that is true, but there I think they don't go to the root cause of why stock prices were low. So you can say, yeah, the economy in the EU was quite bad. So there was not a lot of demand for loans, or they had a lot of bad loans on their balance sheets, the banks. But I would argue that the national and EU policymakers were to blame. We could have had much higher growth within the Eurozone and the EU as a whole. And so that's a big reason why bank stock prices were low. I'm not going to go into the specifics here. If you want to know more about how the EU could have done more for economic growth, just subscribe to this podcast. And I'm going to talk a lot about how the EU can grow more in 2025. And then other than the economic policies of the EU, also the ECB is to blame, not so much for its banking supervision, but for the monetary policy. So for a very long time, the interest rates of the ECB were zero or negative. And as we've seen, when inflation went through the roof, then they finally hiked interest rates. And what did we see? Banking stocks exploded. So finally, they started making a lot of interest income again. So if the ECB would have raised interest rates a lot earlier, then banks would have been more profitable, and we would already have seen a lot more M&A, and then the ECB and others wouldn't have to gaslight banks. Why aren't you doing more integration and consolidation? Actually, it would have been a very natural process. I think those are a big part of the reason why there's not more M&A activity. But a second problem is also the ownership structure of European banks. I already talked about the ownership of banks like French BPCE and Crédit Mutuel, which are cooperative banks. So they are not listed on the stock exchange, or they are not controlled by wealthy families, but their shares are owned by millions of cooperative retail clients. So those people are not interested in high returns from the banks. And so these cooperative banks will be more focused on their domestic market and less on foreign expansion, because it doesn't benefit the cooperative owners a lot. And also cooperative banks are harder to acquire, because if you want to buy them, who's going to make the decision? Like there will be millions of people who will have to agree. So BPCE in France, as well as Crédit Mutuel, and to some extent even the Crédit Agricole group. And in Germany, as I already mentioned, you also have the cooperative Volksbanken and Raiffeisenbanken and the Sparkassen. In the Netherlands, you have Rabobank, which is, or its official name is Coöperatieve Rabobank. So of course, there you also have the structure of the cooperatives. So that's a reason why those banks are less interested in acquiring banks abroad, and also harder to acquire. And then the second problem with the ownership is that you still have a big government ownership in the banking sector. And actually, it's quite ironic that the authors from Bruegel don't identify this as a cause, because I remember that Nicolas Véron, one of the authors, once wrote a report on the ownership of European banks. And some big banks are still wholly or partly owned by governments. So, for example, a bank I already mentioned here in Belgium is Belfius, which is the remnant of Dexia. So Dexia was one of these banks that failed, not just during the acute banking crisis, but quite gradually afterwards. And so Dexia was split up in a bad bank, which they dismantled. And the viable parts in Belgium are now called Belfius. And it's more than 15 years after the banking crisis now, but the Belgian government is still the owner of Belfius. So they have had a lot of time to sell that to private investors, but they didn't. And the same is true to a smaller extent in countries like Germany and the Netherlands. So in Germany, the state bailed out Commerzbank, and now they are trying to privatize it. But there you can immediately see that when it turns out that an Italian bank, UniCredit, is trying to take over Commerzbank, the German politicians make up reasons why they shouldn't be able to do that. So basically, this is a kind of petty nationalism, because there's no reason why an Italian bank shouldn't be able to acquire Commerzbank. And it also shows you the hypocrisy of all these European policymakers, which they claim they are in favor of European solutions and European ownership. But when push comes to shove and a foreign bank tries to acquire one of the so-called national champions, they try to block the acquisition. And you can see the same in the Netherlands. The Dutch state still owns, I think it's about 30% now, of ABN AMRO. So that was also one of the banks that was actually acquired by a couple of banks, including Fortis again. And then it was nationalized when that deal blew up. But so the Dutch government still owns about 30%. And I can imagine if a bank like, for example, BNP would say, now we want to acquire ABN AMRO, that the Dutch government would also make up excuses why they cannot sell or why they cannot approve the acquisition of ABN AMRO by another European bank. So those are some banks that were bailed out. And then specifically for Germany, as I already mentioned, you have this Bayer Landesbank, Hesse Landesbank, LBBW. So those Landesbanken, somebody has to explain to me why local governments need to be owners of mid-sized banks. It makes no sense at all. I mean, there are so many other priorities. Owning a bank is totally ridiculous now. So I think if Europe is serious about the lack of integration in its big markets, the obvious solution should be to just privatize those government-owned banks and let the market play out. So that's it, what I wanted to tell you about this report. So again, I think it's a very interesting report. It has some nice charts. If you want to learn more about the structure of the banking union. But my message from this podcast is you have to really look at the root causes. So the profitability of banks was undermined by the economic and monetary policies within the Eurozone, and also just the fact that there's way too much government ownership, because you cannot really, I don't mind that banks are owned by cooperatives, but I think if European policymakers are serious about making more pan-European banks, they should just privatize their government-owned banks and just let the market play out. So that's it. Thanks a lot for making it all the way to the end. My good intention for 2025 is to make the podcast weekly again. I'm going to put it first on Spotify and the podcasting platforms, and later post it also with some pictures on YouTube. But YouTube is gonna be mostly a few pictures, definitely not with animations or something. So I think you don't gain much by watching it on YouTube, but if YouTube is your preferred channel, you can also subscribe there. Because I'm also going to do some videos again with more moving pictures, but with definitely full scripts. Because if I want to pick up the pace of one podcast per week, I'm not going to be able to write out my scripts, and it's going to be more like natural language and not very clean cut. So thanks again, subscribe if you liked it, and till next time.